Hi folks, and welcome back to Me and for Money. Justin Urquhart-Stewart from Seven Investment Management is here once again. We've been doing a world tour looking at how the world economies interact and how they impact your finances, your investments. So we've talked about the UK, we've talked about the US, and we've talked about the Eurozone. So let's move further east. I keep hearing and reading that this is where the future is, that the future is Eastern, Oriental, or whatever. So what do you reckon about that?
Well, of course, as ever, from the Western perspective, we tend to lump it into one group,
Yes,
don't we?
yeah.
Of course,
Over there.
hugely different. Let's start with Japan, because the rising sun, which has been waiting to rise for some time, many false dawns there. But what you've had in Japan is, of course, Abe-san, the new premier, Abe, coming to power with a whole lot of new policies. Not always that new, actually. He's been in power before, and he wasn't much good then. This time, everyone thinks he's going to be better. I hope he is. His biggest idea of a policy was not quantitative easing, because they did a bit of that before, but I have to say, more like quantitative dysentery. Just a huge amount of money.
Did he use the word unlimited?
Yes. Which is
a
really
little bit worrying.
Yes, it really is. Well, given the level of their debt, which makes the Greek debt look quite good, actually, it almost doesn't matter. Bear in mind, since 1989, they've been going in and out of recession, in and out of depression, and more to the point, in deflation most of the time. So when we worry about inflation, actually, most of our central bankers are quite happy to have inflation, and even dally with the idea of greater inflation, which we would have to control, because they do not wish to go anywhere near that rock, which is called deflation. Because Japan, once you're on deflation, it's really difficult to get out of it.
Can we just define deflation?
Deflation. Well, we've got inflation, disinflation, and deflation, right? Inflation, and that is where the prices of things are actually getting higher the entire time, and with it, obviously, your goods, with it, your hopefully your wages too. Disinflation is actually when inflation itself, there is just less inflation, but it's still inflation.
Okay.
And then you've got deflation, where the balloon's actually getting smaller.
Okay, so prices are going
And
backwards.
prices are going backwards, and so demand goes down. And demand goes down, so less manufacturing. And it becomes, instead of being a virtuous circle, you get a vicious circle going back down. And the problem is, with deflation, if you and I have got some money and we know that glass is actually going to be cheaper next year, we'll sit there and say, well, I'll wait till next year then. So actually then it becomes very difficult to try and encourage people to go out and spend. And that's what they did. They even gave the adult Japanese lumps of money just to go and spend. $400, I think the figure was. And to actually go out and spend. And what do? Save it. So you couldn't even give people free money to go and spend. But the trouble is, we know Japan has been hugely efficient in terms of manufacturing, making great cars and things like that. But actually domestically, it's hugely inefficient. Its farming systems are a bit like the old-fashioned common agricultural policy we always blame the French for. All the rice is heavily subsidised, and a lot of the civil service and the banking systems haven't really been reformed at all. They've got the Japanese post office is a rather, it's very unfair to say, corrupt but highly inefficient bank, and frankly needs to be swept away. So those sort of old-fashioned elements, and this is what Abe wants to change. Can he? Well, it remains to be seen. We've had a lot of promises, and the markets have shot up. That lovely old phrase, better to travel than to arrive. Well, during the summer, we arrived and we saw the markets go back down again. Now they've started picking up on the basis that, well, we're seeing some progress. But the big issue is, can he get inflation into the system? Okay. And so we have to wait and see. So Japan, making some progress, but their debt levels are eye-watering. They're going to lose their credit rating levels. They've upset the Chinese, and that's not difficult, because the Chinese accuse the Japanese of trying to fix their currency. This is the Chinese accusing someone else of fixing their currency.
Pots and black and kettles and things.
Precisely so. But of course, that plays out in the Chinese media, and of course that affects Japanese trade with China. And so that's caused a problem, as of course the disputes with those East China Sea islands as well. And that's exactly the sort of thing where both countries get rather nationalistic. So what that tiny little saw, it could turn out to be something much, much more important. But I hope diplomacy wins out over that. But that's a nasty issue to watch.
You mentioned about inflation, and you just mentioned a little phrase that most central bankers don't mind a little bit of inflation. Is that because if the definition of inflation is that your prices go up, so your money buys you slightly less next year than it does. And so if you have a debt level, then it is relatively lower next year because inflation has reduced it. So does the reverse work then if deflation is the case, you end up with a spiraling
Yeah,
debt as well.
It ends up getting worse. So
That's a way of thinking about it.
yeah, it really is horrific. So that's why they will avoid it. So whilst people worry about higher inflation, most politicians don't quite like it, particularly with our position, of course. What's the best way of getting rid of our debt?
Yeah,
well,
inflate
it
it.
away,
Yeah, sure.
but just don't tell anybody. As a policy, it's not what you want to admit
No,
to.
it's not a
So
headline
politicians tend to sort of talk with forked tongue. We're going to control it, ship it in. And so be wary.
Okay, so that's Japan.
Yep.
But as you say, East, capital E, is a bit bigger than that. There's more there. So China.
China's gone through a change of life this year, as we've seen the new administration coming in. Their suits may look the same, but they're very different people. And so what you've got here is Xi Jinping, and he's come to power at a moment when China's changing its life. This change of life, where it grew since 1979, when we had Deng Xiaoping coming to power, and the first shafts of light of capitalism were let into this communist regime. And of course, what that gave us was cheap goods. China price, the cheapest price of goods in the world. And we benefited hugely from that. We, of course, thought we'd managed to conquer inflation. We were very clever. Inflation went up. No, we just found the world's largest sponge. China absorbed it all. China exported deflation to us all. And we loved it. Now, that's fine. We bought all these cheap goods. China had an export boom. And then we had a financial crash. So you, me, Joe Schmo in the States stopped buying stuff. Well, we still bought stuff, not as much. So China goes into a real funk as to actually what changes, how it actually operates. So now, instead of exports, which they'll still be doing, what they're now finding, of course, is they're losing manufacturing elsewhere. Because what's happened is the cost base within China has been rising. So America has been actually finding some of its manufacturing going back.
Yeah, Apple.
well,
Just launched their new Mac Pro is going to be made in
Yes.
the US.
So what you've seen is that word we mentioned before, reshoring back to America. We've seen manufacturing going to Indonesia. Some of those terrible textile operations in Bangladesh, where do they come from? China. And so you're seeing China going through this change. Now what's happened? Well, first of all, you've got the issue, of course, one child, one family policy, mostly boys. We don't want to go into why. They've been going through the age group. They go to university, come out of university, shortage of jobs because the factories have been closing. The men tend to have priority over women for work. So the factories have changed from 80-20, female-male, to 60-40, male-female. Right. Stroppy males, what happens? They go on strike.
Yeah.
Doesn't get much reporting on the BBC, this.
No, surprisingly.
So what you've had is wage rises in Guangdong last year were over 20%.
Wow.
So the cost of production's gone up. So people are now saying, even in Britain, and I've seen some amazing examples here, not only of reshoring back to Britain, apparently we've reshored pot noodles back to Britain.
Wow.
Frankly, they could have kept them. But anyway.
I feel so proud.
Yes, our national treasure. But we started shirt manufacturing elements I've seen in the East End of London because it's cheaper now in London than it is to make it in China and ship it back
Quite
here.
a shift, isn't it?
It's an awful shift. So what does China do? And the answer is it now refocuses domestically. It's focusing domestically on its middle class.
Which is increasing at an incredible.
It is increasing at a large rate, but still, compared to the overall numbers of people,
Wow.
relatively small, but focusing it through its banking system. Some of its banks make ours look quite good. Its secondary banking system woofs something awful through an accounting system which was probably written by Edward Lear. The Americans look at it and just say that's not an accounting system. And through a property market, there's no property code. Except in Hong Kong and Macau and a little bit of Shanghai. So if everyone has ever offered a Chinese property fund, think one word, Spain.
Oh, God, yeah.
So beware of the way. So they're going to focus this domestic. Is this going to work? We don't know. We really don't know. So China has gone, its growth figures have come down, and please be careful of growth figures. The Chinese growth figures have an amazing ability to match up what they think it's going to be, which is, I think our growth figure is going to be 7.5%, and out comes figure, stone me, it's 7.5%.
Who knew?
Nobody knows what it is. It'll be growing at somewhere between 6 and 8%, which is the long-term level for a developing economy.
Okay, so
It's not going to be going up like that, but it'll still be there. You don't have to invest directly in China. Their domestic stock markets are highly unreliable. You need to go through Hong Kong if you're going to be doing so. But actually, as investors, you can invest in the effect of China. Invest on what China needs in terms of things like healthcare. You could just go through Unilever and Reckitt and Benckiser. With alcohol, people like Diageo. So actually, a lot of those multinational companies are very much plugged into it. So you don't need to have the risk of going in there. So China slows. Is it a hard landing? More like probably landing in a swamp. They're going to find it quite difficult to work their way out of it, but it will still grow overall. But that does affect the rest of the world, but doesn't necessarily make it all stop.
Okay, great. Right, very interesting. My mind is buzzing with questions, but especially another good time, I think, to stop, and we'll wrap things up probably next time where we'll talk about the emerging economy. So thanks for watching. We'll see you next time.